press conference, and I want to obviously thank Michael Masters and Roger Johnson and Dave Andrews and Sean Coda, of course, and Randy Mullet and Paul is that right? Ciccio. Thank you, Paul Ciccio. Thank you. We're going to hear from all of them, and so I appreciate them taking time out this afternoon to try to help illuminate this issue. There are many people here who are working hard, businessmen and women who are trying to make sure that our financial markets are safe. And we know that unregulated dark derivative markets allow Wall Street to make bad bets on toxic financial instruments, and that these bets had harmful consequences that reached far beyond Wall Street. They led to dangerous price spikes which cost our economy's jobs and forced innocent Americans out of their homes and drove small businesses into bankruptcy and decimated retirement savings. We understand what happened, but we're here because banks considered too big to fail continue to take risks in derivatives in the markets on energy and food and the credit that Americans count on and need every day. So we want to see legislation that is not only going to change and bring transparency, but to have that legislation passed without loopholes. Many of you know that many hardworking Americans on Main Street must be the priority. And we must get capital flowing again to community banks and to small businesses. That's why I'm very supportive of making sure that we get a program implemented as soon as possible. And at the same time, we must bring transparency and capital requirements to the entire derivatives market. Under our current system, market manipulations in the commodities, futures, and derivatives market is completely unregulated to the degree that we need regulation, and it has become no more than a high-stakes casino. To restore transparency and accountability in our financial markets, it is critical that we move all standardized derivatives onto fully regulated public exchanges and central clearinghouses. Clearing alone is not enough, and neither is exchange trading. We need both. My concern throughout this process is to make sure that we have the entire unregulated derivatives market out of the dark, closing the loopholes, and to make sure that they have the right oversight. I remain concerned about any exemptions from the regulation that would lead to a dangerous derivative trading that would be done off exchanges without capital to back it. That is specifically, we're here today to say we cannot allow an end user exemption that would allow as much as 60% of the derivatives market to be without capital behind those bets. And we must not allow an over $50 trillion foreign exchange loophole that we have seen in other proposed legislation to continue to have that dark market grow. All derivatives must be fully regulated. The House of Representatives passed legislation that had loopholes, and because of that, we have concerns that the Senate might do as well. Lobbying has already been seen here in the Senate to encourage such loopholes, and that's why we are standing here today, to say that we must stop these loopholes. The people behind me are the end users who understand that we cannot have loopholes that exempt up to 60% of the contracts. I will be fighting in the Senate to make sure that the over-counter derivatives market is traded on regulated exchanges and that their transactions are cleared in regulated clearinghouses. And I will be working with all my colleagues to stop any kind of loopholes that will continue the risky business practices that we have seen so far that brought so much havoc to our economy. Now I'm going to turn it back over to Heather.
Thank you. And now we'll have time for some questions. And can you identify yourself and your outlet?
I'm Bill Holland with Platts. Senator, it doesn't sound like you're very confident that Senator Dodd's going to get anything into the financial reform bill with regards to this. So can you give us any insight into it?
Well, derivatives are really in the Agriculture Committee, so we're hoping it's fine if the Banking Committee makes comments about the derivatives market, but the legislative authority is in the Agriculture Committee, and we hope that they'll come out with very strong transparency and oversight. I know my colleague, Senator Feinstein, and I have been working on a letter to the Agriculture Committee emphasizing how important it is that that the over-the-counter derivative market be on exchange and clearing houses.
Questions, Kevin Hall, Flash Newspapers, one of the industrial representatives, what is your getting blowback, I guess, from such stats suggested, what are the theories as to why they don't believe in excessive speculation? Is it the thought that like the dollar moves on the dollar? Are they giving you any sort of sophisticated answer, or are they just simply doing that? And the Senator also, Mr. Masters, focuses carefully as well. What sort of answer are you getting from the end users? Think of it theoretically, an end user with transparency in the derivative clearing would benefit the end user at the expense of the broker-dealer's knowledge and information. Why are big end users like Cargill standing next to the broker-dealers?
Well, first of all, to your first question, when we have approached these Senate offices, we find a varying degree of understanding of the marketplace. Mostly, we find that there has been insufficient time by staff and by senators on this issue. When it gets down to this issue of excessive speculation, I mean, the broad banking issue, they get it. But when it comes to us talking about things like index funds, these things haven't seemed to have reached the radar screen. In regards to costs, the example that I gave you of natural gas in 2008, that cost consumers $40.6 billion. Let me give you a reference. The total spending of the manufacturing sector in an average year in capital investments is about $45 billion. So when you're talking about $40.6 billion, you're talking about a lot of money that consumers are spending that they wouldn't have had to spend otherwise.
I think the issue, first of all, these are end users behind us, if you didn't pick up on that in an implicit way. And so they are here to say, we are end users, and we certainly support closing the end user loophole, as he just described, because there's a run-up in cost. And my guess is that Wall Street went to some of the bigger end users saying, hey, get down to Washington and tell me you don't like this. And here's why you should say it, because it's going to raise your costs. And the reality is they meant it might raise their financial cost. The reality is the practices are going to raise the price overall. And I think if those end users really understood what was happening to them, they would be standing with us instead of going to these individual offices.
The question to follow up on that is that at Cargill, big private agriculture companies are sophisticated. So I'm wondering if you think there's something else in play, that there's kickbacks, not the right word, but some sort of broader financial arrangement where they're getting some sort of financing benefit somewhere else down the line. It just seems they're sophisticated enough to know that they benefit from the transparency.
All I can say is when Enron's manipulation practices happened in the Western electricity market, I thought this has to be one or two people. And then I found out that it was much bigger than that. And then I had no idea that those were practices that were not just being practiced in the electricity market, but were a lot more pervasive. So I think it's time for us to have true transparency and to make sure that we're looking under all of these scenarios to make sure that we really understand. Because I think it was said best about price discovery. These markets were established for futures to give some price certainty to the future for those people who truly did have to hedge. But now they've turned into very unreliable sources about supply and demand and finding true price. And that kind of distortion, we know what it just cost us in the U.S. economy, but what people don't truly understand is it's still going on today, and if you pass legislation that doesn't close the loopholes, it will still be going on, and the only message will be, don't worry about it. Whoever the big end user is, the government will bail you out.
Yeah, Sarah Lynch with Dow Jones. In addition to the so-called end user exemptions that are in the House bill, there's also, some people have said it's a loophole because it doesn't include full regulation for forward currency contracts. What are your thoughts on that, and what have you heard in terms of what might come out in the Senate bill that they're developing now?
Well, I hope that both of those things will be closed in any kind of Senate legislation, and if not, I'll be offering an amendment on the Senate floor to close the loophole, the foreign exchange loophole. Somebody said it could drive as much as 75% of the market through that kind of loophole. So it's very concerning.
Again, just Senator Cantwell, back to the agriculture debate, derivative legislation. Is that your understanding that they plan to do that? Because all the focus has been on what the Asian community is going to do. We haven't seen a lot of activity.
That's my understanding, yes. A good plan to take on.
Senator, should we interpret your comments today, and Dr. Chairman, first time to me that you're not having a lot of headway with Senator Lincoln and others on this issue of the end users?
To be honest, we wanted to do this press conference in December, and in response to the House, and we just, because of, snow and healthcare and everything, just didn't get it done. So our response has really been what we have seen. People have added comments to what they've been seeing in the Senate so far, but our concern, our alarm bells went off when we saw what the House did, and the fact that people were promoting these kinds of loopholes.
What influence have you had in the last couple of weeks with the Obama administration talking about the VOCA rule and their recent change in position? How did this come about? Was it resolved, or if you're on the outside, what do you feel things are in the administration now that they have changed?
I'm glad to see Mr. Wilbur's presence at the White House. And I think that the discussions that are happening now are about how we have, I take the president at his word when he said that if he got a piece of legislation on his desk on regulatory reform that wasn't strong enough, he would not sign it. So I take the president at his word on that. I think the concern that we've seen since that announcement has come out, we've had various publications and various experts say the notion of defining the VOCA rule as a prohibition on proprietary trading, that the definition of proprietary trading could be so narrow that then all these other practices would be allowed. I introduced legislation I think is much simpler, return to Glass-Steagall.
We have Bill Holland against Platt. Two questions. First of all, do you think Chairman Gensler of the CFTC has pushed far enough? He's already put on some position limits. Could he go on further? Are you disappointed with what he's done so far?
I think Chairman Gensler could go further, and I would encourage him to do so. By that I mean he has a challenge where he has to get so many votes on his with the other commissioners, but I would encourage him to be as aggressive as possible, and let's see where the votes are, and let's see why they're there, and bring that kind of attention and heat to the discussion.
Like, a follow-up to that. That rule hasn't been finalized. It's a fairly liberal position.
I do not think that rule is strong enough. And one of the reasons why I think they proposed that rule was they thought, well, maybe we can propose a weaker rule and get the votes. I think the American people will soon find out whether we have strong enough regulatory reform. These end users here are talking about the economic impact of not having closed the loopholes, that you have exorbitant prices that are not based on market fundamentals. And that will ultimately cause havoc to our economy, if not, as some have already said, create another bubble with another implosion. And so, to me, let's have this debate in public, so I would hope that the chairman would be, this is the strongest rule, and why, to protect these end users and the American consumer, and then let's see where the votes are and who's not supporting that. That way I think the American people then can decide what kind of leadership they want.
I lost my voice, so this might be hard to hear.
Can you say your news organization?
Yes, I'm with LPAC TV.
And your name?
My name is David. Sorry. My question is, while I applaud your efforts and the efforts of the House to reintroduce the Glass-Steagall provision of the Banking Act, when you do look at derivatives worldwide, derivatives as a market dwarf every other thing that happens in banking. And before we even had Glass-Steagall, we did have a general reorganization of our banking system under FDR. Do you really think that we can simply reintroduce a measure like Glass-Steagall without first having a complete reorganization in bankruptcy of our financial and banking system?
I think a couple of things can happen. First of all, if you look at the comments from Davos this past week, most of the European, community and their interests are kind of frustrated that the United States isn't taking a stronger position. They want a stronger cleanup of these markets. So instead of us leaving loopholes and then encouraging the rest of the world to have loopholes, we should be closing loopholes and working with them to have those stronger regulations. And I think you can return to Glass-Steagall. Listen, we have all the time the separation of large companies into subsidiaries, into secondary companies and organizations, and we could return there. It's not to say that this all was created overnight by one administration or by one Fed chair or anything of that nature. It has been going on for several decades, but I think we can see that it has promulgated practice with this latest economic downturn that we cannot risk having happen again. We just can't.
Victoria McGregor from Politico. Senator Dodd said last night he doesn't want to have to go begging on the floor for financial reform. After seeing what the Senate is still going through on health care, what do you feel that the chances are of a bill that you think is tough enough to actually get through?
Well, I think that there will be support for a regulatory reform bill, and you hit the nail on the head. It's just how strong will that bill be and how many loopholes does it have in it. And I think that will be, not to put the heat on you, but that will be up to the press to explain. And it's a very big challenge. It's a very big challenge because this is a very complex subject. And that's where the term smartest guys in the room came from. People figured that the smartest guys in the room would figure out how to do this and people wouldn't understand it. And they wouldn't be able to be outraged by it. And that's what people are banking on again, in that people won't understand derivatives or the loopholes or what they mean. And so consequently, we'll end up with legislation that just kind of promulgates the same practices. Well, I guarantee you, if that happens, America will know the difference.
Last question, yes.
Sarah Lynch, Dow Jones. In the House bill, Congressman Lynch had included a provision that would prevent big banks from controlling ownership in a clearinghouse. And I'm getting a sense in the Senate so far that there's really not a lot of support for that. Is that something that you support? I'm sorry, where's it from? From Massachusetts. Yeah, and I'm just getting a sense that that's not really something that could happen here. Are you hearing differently, or do you have an opinion on that proposal?
I support it, but I haven't heard a lot of discussion here